Hey, left, right, out. Um, what can I say? Today was an interesting day. Like I've said so many times before. And if I look kind of sick, I actually had a COVID shot, and it's wrecking me today. I had to have one. It's a whole other story. But okay, let's look at what happened today. The market, the Dow, ended the day down 486. S&P, let's call it 65. Nasdaq, call it even 200. And Russell 2K down like 43. If we looked at what was going on right in the open, you had the 10-year selling, or you had bonds in general selling out. Especially when I look at the 10-year a lot. That thing hit like 378, I believe. You had the selling pressure in the broader market. I noticed the S&P was down at one point when you got into the midday. We hit 100 points, 100 points down. That was roughly, like almost 3%. It was a substantial move, in, I guess, relative. And I'd say the substantial move because it hit some key levels. So we're looking at the June lows of, I think it's 366, and we went past those. We're in the 3.5 something, and I was looking at that and I was thinking, oh well, if we actually held below that, that'd be significant. Then something peculiar happened that seemed a little bit irrational. You had a rally in the bond market there for a second. You went from you rallied 10 basis points essentially. You went from 378 to 368. Or roughly right around in that area, which is a significant relief rally. So you wonder who stepped in on this. And I have my own, who I expect to come in and save some of these markets if they look like they're going to run away. And that, we all know them as the central bank, or possibly a central bank or a prime dealer or something. Somebody went in to me how I seen the action and kind of maybe they didn't. They kind of stopped the bleeding. I'll just put it that way. That's what it seemed like to me. So I think that like kind of stopped the Dow and the S&P, the Dow from going down to like 1,000 and the S&P from doing like a 120 day. What will we see next week though? We did puncture that June low. So with what we're seeing from the Fed, I'm looking at the balance sheet, we've actually gone down 100 billion over since we started this QT. So I mean, we're contracting the balance sheet slightly. We're seeing the consumer really take a hit, like you said. Excuse me. In the past, I mean, the consumer, as long as they're taking out more credit to consume, that's inflationary. But what we're starting to see is the consumer is really starting to get squeezed, and the sorry, whenever I do this, somebody always texts. I can not get a text message for a long time, all of a sudden somebody will start shooting me text. But anyway, we start seeing the consumer really starting to fall off here. But here's the other thing. So you can have the QT, you can have interest rates going up, you can have all that and still have rising prices, because here's what's happening now. The damage has been done. We haven't done, the Fed should have acted sooner. And then you have companies that let's just bring out one, for example, Ford. They're cutting supply and raising prices, so they expect less sales, and they're going to try to offset that with raising their prices. Sorry, man, my brain is fried. But what's going to happen anyway? So you're going to see continued pressure on the upside in some of these prices. Like you said, on the supply side, especially on food, you're seeing yields down. You're seeing a lot of interesting things happen when we get to closer to November and Thanksgiving. The turkey stuff, like I've talked about before, those prices are going to be astronomical. If they already kind of are, if you bought sliced turkey recently. But so there's a lot of pressures on the upside because of supply destruction, or the supply chain itself. Discongruity there. Like I've said, my strategy is shorting still, and then being very selective on certain stocks. Like I said, I'm not buying any more of the gold stuff. I'm waiting for this pressure to keep pushing gold down, in some of those gold stocks. They're right in my wheelhouse now. A couple of the ones I'm looking at, where I'll start like buying a few shares here and there. I mean, and some of the ones I'm looking at right now, they're yielding 5-6%. And once you have the Fed pivot, because they will try, they're not going to fight inflation for very long, especially when you have this kind of deterioration in the consumer, when you have this kind of deterioration in the housing market, when you have this kind of deterioration in the manufacturing base. With places like Ford, they're going to have to pivot, because one of the things going to happen, they keep going up, they're going to cause a bankruptcy in one of these companies, one of these big companies. I don't know who's going to go, but I suspect that somebody's going to go soon, especially when they start accessing the debt market. When you start discounting against this current Fed funds rate, when everything has been based upon pretty much 0%, things are going to start getting more and more interesting. So what do I say? So I'm being very selective. I'm still short. I think with what's happening, I'm betting that we're going to push through those June lows and we're going to head towards that 3,400. It looks like there's some level right there, and if we need a flush out, to be totally honest. We need that 200 300 point day in the S&P, like hit one of those breakers. We need that for capitulation, because right now all these sell-offs are, in my opinion, they're fairly orderly. If you remember some of these other crisis moments or when things happen, there is some real fear in the market. And the VIX was at like 32, it hit 32, it closed under 30 today. I mean, moderately elevated, I'd say, but not panicked, in my opinion. I've seen the VIX a lot higher. It's not panicked. These moves aren't panic. Granted, it's broad based. When you look at all the red in the markets today, it's very broad based. We look at crypto, and I have mined, especially helium, which seems like that market for helium is just collapsed, even though the price of the coin is, it collapsed from earlier. It's like $5 something, but like if you mine, the rewards are dog crap right now. You look at Bitcoin, it's at 19,000. It's about to break that. It broke it, went to 18. I was expecting Bitcoin actually to break and go further to the downside. We'll see how that works out. I suspect that one of these markets here, and we know the housing market's on the cusp, it's already broken. We're just waiting for those pieces to fall. But this crypto thing, I'm waiting for that too. So you have these canaries that are in the coal mine. The crypto market already kind of crashed, kind of signaled what is going on. Now you have, on the other side, you have the housing market. Then you also have these other companies, like they're zombie companies that have been built up off 0% interest rate, these cheap money loans, where somebody's going to give. We just got to see which one is, who's going to go first. We've seen some of these companies stressed out overseas, or not some of these companies here, but we've seen companies overseas stressed out. But we yet to see a big giant shock to the system that causes a flush down. And until we see that, man, I every time the market rallies or every time the market acts orderly, it gives the Fed justification to keep going. Until it gives the Fed that signal or really makes them cry uncle, they might actually, try to keep going up. But if we keep this historically, then I'm going to end this here. Every time the Fed has gone up, they've pretty much broke something, because it's a manipulated system. There's not a real market there. But we look at the prior interest rate hikes that have caused things to run into problems. I think Greenspan hit 5%. I think Bernanke, we went to 2.5 or something like that. I mean, it keeps getting less and less. Somehow we're at 3.25 now, and it's like people like myself, I'm holding my breath, okay, what's going to happen? Where is, the tide is going out. Who's naked out there? There's a lot of people naked. It's just I don't know, we got to see those people. We got to look for them, I guess. I don't know. But anyway, there's an interesting article I'd like you go look at it, and it's from Strider, which I remember them from when I was in, I think I just got one, before I went back into service, somebody was working for them. And they did a report about these recently. That's what the article is. But anyway, Strider Technologies, and did a report on systemic. I'll just read it. A systemic effort by the government of China to place Chinese scientists in Los Alamos National Laboratory. Interesting article. Go look it up. You can probably Google it. It goes along with, I believe, that one China. Where was it? I talked about this a long time ago, but how the Chinese were infiltrating the academic systems here in the States. This kind of goes along the lines with that, but it's interesting how they're taking some of these scientists, embedding them in these places, taking them back, and they're working on very sensitive national defense projects. I don't know, man. Anyway, talk to you later. Peace.